Hello, everybody. How's everyone doing? State of emergency here in California. Blake,
Good morning, Dale. Good early morning, Dale.
I came in.
Good morning, Dale. How's it going?
Okay, if I could avoid coming to California this weekend, I would do it.
I know, I was actually just mentioning that to my wife yesterday. I'm like, we're going to go to California and we're going to get in rolling blackouts, which is going to be phenomenal. But
yeah.
For those of you that don't know what I'm saying or what I'm talking about, I am going to California this weekend for my son's soccer tournament. And I'll be not too far from Dale, maybe about an hour away from Dale or less. And but it's going to be super hot there, right, Dale?
Yeah, 110.
That
and
is,
what is state of emergency? Yeah, state of emergency is kind of code word for, they're going to be doing something. We could have a blackout.
Yeah, so it's that'll be 43 degrees or so in Celsius. So it's state of California, blackouts. I can't wait.
I got to get out of here. Anyway, any thoughts on the market? I'm preoccupied with fear of living without air conditioning.
Well, I want to let Kman and everybody else talk. I'll be quiet for a while, but okay. I do have to say that Dale was really nice meeting with you yesterday.
Thanks.
For those
Blake.
of you that don't know, I interviewed Dale on Trader Summit. Had a great interview. It's actually being edited right now. Should be published a little bit later this morning or later today. So you guys and gals be on the lookout for that. I'm going to shut up and let Kman tell us what the hay is going on this morning.
Blake recorded that before I die of heat stroke here over the weekend.
We might with shriveled raisins by the time we get
so that he has something for posterity. Anyway, go ahead, Kman. Take it away, bro.
Blake, why do you have to edit the video? Did you not sing to the same tone as Dale was? Were you guys not in sync?
We didn't sing, no.
We did not sing, no.
Oh.
But it has to go to the editor. They got to put in the disclaimers and all that other fun stuff. So
it should be really good. I can't wait for it.
It is.
I can't wait for the dollar to turn already.
Yeah, well,
never going to happen, is it, Kman?
It's not that it's never going to happen. I think the next 2 days now, well, I mean, starting a little later with the PMI and the ISM, and then tomorrow NFP, is really going to set the tone for the dollar. If you look at the if you could put up the 10-year yields, they are a little bit on a resistance here, in my opinion. I've got this 320, 325 zone marked on my little post-it, and the next 2 rounds of data can decide whether it's gonna pull through or not.
And I didn't do the fibs, but I'm betting it's about 61.8 back of this decline. Just eyeballing it.
That looks. Let me see what I've marked here, and I've also seen it's. No, I have it of the bigger move up, so it's a 23.6 on my one. But yeah, it could be the 61.8 of the retracement. Now that comes in a bit higher, or lower actually, the 61.8 of the whole thing. But
of this,
yeah, that comes in lower.
So what is it, 78.6 or in between?
At 329.
Okay. All right.
Yes.
What goosed yield yesterday, and it seemed like it happened after the close?
No, it happened the whole day virtually, right? I mean, I do think
this candle,
Still some of Powell stuff in there. Still a bit of repricing of yields everywhere. European yields went flying. UK gilts put in record levels as well, but I think some of it may have to do with end of month rebalancing as well. There was a lot of talk about rebalancing from equities to bonds back and forth, and I think now we are start of September, and this is important. What's going to happen in the next 2 days? I think for the dollar after Powell. Yesterday, the new member Logan, she said she fully agrees with him. So the dollar should, I think, find buyers on dips right now. And then there's the other side is the euro, the ECB. So far, we only heard from the hawks, but today we have the first semi-dove coming out, Centennial, saying that the policymakers should not go too fast. So that could put a little bit of a damper on those 75 BP expectations from the ECB. So the next week will be decisive for the euro as well, and then then roll on September. And as I said already a couple of times, I think September is going to be a big month for a lot of assets.
Okay, I think S&Ps are bottoming here for a bounce, and it's a 3 drive, and 39.20 were a lot of objectives. I think it was even Greg's when he was here early in the week, 39.20. So that was a target a lot of people had, and as you can tell, compared to these lows, even though it's not ideal, divergence is pretty glaring. So I'm not saying you can't make another trip down here, but we could correct this decline.
It's
maybe
possible
at least back
if
there.
yields start to cap.
Right.
It's now like the correlation is pretty high, right?
Yeah.
So if yield starts to cap, this is actually going to be a case of probably rebounding to what 40 and a quarter, 40 and a half.
Something. Yeah.
Yeah.
Yeah. You know. Yeah. 2-3%. Yen on the daily made it.
Yeah, I was gonna ask Kman, as you guys are visiting the yen, what do you think of that move that we saw in Asia last night? I mean, you know, the yen was trading above the 139.50. And I personally think we're just pausing here as we're going to continue to grind higher. But do you make anything out of that move overnight, Kman?
Yeah, I think I think I still think dollar yen. Well, it's still my view is that dollar yen is going to go higher still. And it's we are pausing. We don't really know what's going to happen. It's going to be kind of data dependent, but we are banging against those prior highs. Any move, you look at the 10-year dollar, it's at 320. It was at 310.12 yesterday. You walk in today, it's 320, and it's and dollar yen is up. At least you guys saw it in your evening, but waking up for myself, and it's just so correlated to those yields, right?
Right.
Yeah, it's back below previous high that we had in mid-July. Yeah, so you know, everyone had their stop here. They were happy for a few hours. Oh, glad I'm out of it. And now we're back under where their stops would have been.
Yeah, but we're fractionally under it, right, Dale? I mean, compared to that we saw over the past months, this is
still a mission accomplished. They take out the stops, and so far no follow through.
Yeah,
that's all. That is what's happening so far.
Yeah.
You know, that's just a comment. It's not a directional idea, but I'm just saying that, you know, everyone who was stop picking the yen isn't there anymore. They're gone. And they were happy about being stopped out for probably an hour or so. And now they're going, I wonder. But you know what most people say? I'm not going to trade that yen again. I got burned by the yen. Ever heard people say they got burned by an instrument? They can't say, you know, I was
just before
wrong.
They hit the buy button again.
Yeah,
I was wrong. I was wrong. You didn't get burned by any instrument or by the market. You got burned by your trading strategy, by yourself. Own it, or you'll never improve. Don't blame the yen for a losing trade.
Yeah, there's a lot of blaming going on in yen, and it's been going on for decades. You and I, we know that.
I mean, you know, and traders will not improve unless they take responsibility for losses instead of trying to rationalize it away that it was the market.
Hey, Dale, do you mind if
Boy, am I crabby today because of this?
Well, I wanted to talk about
outage.
Dale. Can I talk a little bit about yields? Since we're on this topic,
yeah, I could withhold my crabbiness for a few minutes.
No, well, you probably have something to say here. I mean, this chart right here is, you know, very evident of kind of everybody getting screwed, right? So you got this. I'll draw it out, and then it's annoying because I'm using the, you know, the 10-year. This is the 10-year yield, and you can see nice little head and shoulder pattern, right? We were developing quite nicely. We had this little, you know, head and shoulder pattern. Looked like we're going to break down. Here's a target, and then all of a sudden you get this whoop, whoop, and you know, you get everybody stopped out there, and then here we are back of the previous shoulder. Wouldn't it be classic if we just stopped out everybody here and went the other direction? I mean, I'm not saying that that's gonna happen, but boy, that would be annoying, right?
Yeah.
But if you look at the August move, the yields have been going up everywhere, right? And so because this is, we did the peak, I think the bottom on the 1st of August, if I recall well, after those CPIs and PPIs, and then the central bankers came out and told us, no, forget it, we are not going to pivot yet. So this is the whole August move, and now I reckon the data, as I was saying, in the next hours and tomorrow will tell us whether the rates will have peaked or not.
Yeah, I mean, here's Boons right at the same time. You see Boons drop and yields, like you said, yields went up everywhere. And what looked like a complete A equals, you know, AB equals CD, just completely reversed. So, and it is scary because yields look like they're going higher. Like, you know, they actually look like they're going to continue to break out. And, you know, how are the equity markets going to take that move? I mean, it's a scary looking move. Hey, Kman, did you talk about the comments that just came out from the ECB a little while ago?
Yes, Centennial.
Oh, did you mention that already here on the
Yeah,
show?
you were just getting your coffee, I think.
Oh, okay. All right. Yeah.
Can I say something? Good morning.
No.
Okay. Goodbye.
So no, we said no. I mean, Stelios. I mean, come on, no. No means no. Just kidding.
So they should be careful to not overdo it. How was the quote from them? Which is, I'm trying to understand what that means. You have rates at 0.5%, you have inflation at 9%. Not overdoing it means, okay, you stop at 9% in rates. That will be not overdoing it. I mean, how can anybody be dovish with inflation where it is? It's just beyond me. But anyway,
where's the ECB? Where are your rates right now? For the ECB.
The main refi rate is 0.5%. Deposit rate is 0%. So they did a 50. They went
Don't
from
overdo it. Don't overdo it.
Don't overdo it. Yeah. Anyway,
don't overdo doing nothing.
I'm just trying to understand. Seriously, I'm a stupid person. I don't understand. Somebody explain. I don't get it. Anyway,
it's just a joke.
Yeah.
There's nothing to understand.
By the way, did you guys see the Chinese yuan rallying today? I was looking at it a little bit, and I was thinking, you know, what's happened? And there was a headline: the Russians said they're going to be selling rubles and buying other currencies, friendly currencies, so mainly the yuan, because the ruble is getting too strong. So basically, all these sanctions, they're really working, right? Obviously, yeah. I'm joking. Yeah. I mean, their product is more expensive than it's ever been.
I mean, look at the ruble following the invasion.
Yeah.
No, I was asking Brian, and everyone said you couldn't trade it when it was.
Wait, you guys are. There's both of you guys are talking. All right. We can't understand. Dale's, you're right. We can't trade it, but it's off limits. But it just shows you the strength of the ruble following this invasion. But what were you saying, Kman?
That's total crap, right? Because the volumes fell 95% in the FX market in Russia, because all the foreigners are out of it. So they put the ruble virtually wherever they want.
Yeah.
And as we have seen before as well on this Russian comment, because I extensively talked about it on the Flow Show. Okay, they are going to buy yuan, but they're already doing it since March and April, because we've seen, and somebody posted it, a very nice picture of the swap markets in yuan and in dollars in Russia, and the yuan swap market overtook the dollar market already a good while ago. So whatever they're saying there,
I think, and I'm not joking, I think that the comment was purely them trolling.
Yeah, but they say they mull to buy more to buy yuan for $70 billion equivalent. But I think they probably already done more than half of it, if $70 billion is even anywhere close to the reality.
Yeah, it's interesting what's happening in China. I actually posted in our ForexAnalytix. If you guys are in the chat rooms, you go over to the news and research room, and this is where everybody kind of posts links and stuff. I posted this article here, or this video. Where is it? Right over here, about with Kyle Bass.
Oh, yeah.
He makes a lot of great points. He makes a lot of great points in his interview with China, and he was mentioning that when China and Russia did this joint press conference, I mean, it was just before Russia invaded, and the partnership there is pretty strong. And so when those comments came out regarding China, and the ruble, and you can see how the CNH reacted really quickly with the Russian comments. I mean, that makes a lot of sense to me, and I think it's something that we have to watch pretty carefully. I mean, we got to watch exactly what is being said between these two countries, because I don't know what you guys' thoughts are here. And I mean, it's a Thursday before NFP at the very end of summer, so there's not a lot happening right at this moment. Matter of fact, let me look as far as data goes today. We do have ISM manufacturing PMIs, which will be a little bit later this morning. We have some unemployment claims coming out, but I guess I wanted to just say that we should be watching what's happening with these two countries, because as China continues to run drills near around Taiwan, would you guys believe that Russia would have China's back in that type of situation if things escalated? Yeah. What do you guys think there?
Yeah, they are trying to divide the East and the West.
They're the axis.
Well, yeah, I mean, this is like a lot of people believe that World War III has already started, and I don't know if it's just me thinking things just because I was born in Taiwan and I think about these things probably more than most people, but I
worry about everything. Like,
yeah, but I mean, it's like you worry that and then I have kids that are at draft age too, which is also scary. But I think of like a war starting with China and the US regarding Taiwan here in the next couple of years. And the reason why I bring up this Kyle Bass timeline, and I know he's been wrong on China on a lot of things, but they see the timeline of being this year or next year where China does invade Taiwan, and that next thing you have Russia and China on one side, and then you have the United States and the rest of the world on the other side.
Maybe.
Right?
Well, the thing is,
Putin's hoping NATO breaks up over them freezing to death this winter, that they'll realize they made friends with the wrong side.
The thing is, how many countries?
Go ahead, Steve.
How many countries are really
with us? Not
no,
really.
no. I mean, how many countries are really willing to go to war over Taiwan? That's the main question. Because in order to have a world war, you need to have many countries involved, right? Do you think Europe is going to go to war over Taiwan?
Well, no, it's not that though, Steve. It's Russia will advance into other parts of Europe while we're dealing with Taiwan. And this is all happening. And oh my God, where's my tin hat? This is all happening in unison because, you know, China and Russia are coordinating these two events together, right? Right. I mean,
yeah.
Am I crazy?
Yeah, I mean, look at the prior two world wars. We didn't get involved till the end in World War I, and we weren't involved for years in World War II until Pearl Harbor. So you can't have a world war without the U.S. being involved for a while. You know, where it starts with a few countries and then expands. That's, you know, past performance is not indicative of future results, but that's how the first two world wars were. Everyone didn't declare war all at once with each other.
Alexandra says limited world war, don't need to see nukes, and that is the scary thing. Oh gosh, it's something I guess we shouldn't talk about, but I think about this from a currency market perspective, and I just the insatiable dollar strength that's in the market. You know, it's crazy how strong the dollar is right now, and how bullish it looks. And I try to think about what are the things that could really cause like a blow off top in the dollar index. And, you know, because here, this is like a longer term view of the dollar, right? So you can see this weekly chart and this weekly channel. It's very, very, very obedient, right? Over the last, 15 years. Think about what the dollar index looks like above 113. Just imagine. I mean, this is a weekly chart. We're literally at the highs that we have not been at these levels since 2002. Since let's see, I got married in Greece here, and the dollar index is beyond those levels right now. And could the dollar index, think about this, could the dollar index breach 120 eventually?
What was the milkshake guy looking for? 140?
He's looking for it just to completely blow off and decimate the markets. Brent Johnson from Santiago. Yeah, I've interviewed him before. We've talked about the milkshake theory, and that's the thing. It's just when there's insatiable dollar demand, and then you get some sort of catalyst that drives everybody into the dollar, as because they have to shore up other trades. This is why you gotta be really cognizant of what the dollar is doing here, because if the dollar gets much above 113, I mean it is breakout city, and then then it starts it really starts affecting other asset classes, and I think it already is, but it really starts to put a lot of stress on other asset classes. Do you guys have any thoughts here regarding the dollar index and, like I said, this very insatiable demand of the dollar?
If we didn't have a power grid emergency, I'd buy a bunch of milkshakes, but they'd melt.
I cannot believe I'm going from one hell to another this weekend. Gosh, that's crazy.
Yeah, that's really something. Yeah.
It's really
power grid will be okay in Arizona, probably.
Oh no, we're fine over here, and I'm going to drive to hell this weekend. All right, enough of that.
Tell me your keys,
Steve. What do you think about the dollar here? And he's gone. Stelios, what do you think about the dollar here?
And it's gone. What do I think about the dollar? Good question. I mean, the market's trying to second guess when the Fed is going to turn, but at the moment, the trend is still there. Yields are still rising. The dollar is still rising. So we are getting to resistance. Payrolls are going to be important. I mean, I don't know. Would I short it? No.
Payrolls are going to be important. I'm glad you brought that up. I mean, everybody's expecting the jobs picture to weaken tomorrow. Everybody's thinking, hey, this is it. Just like everybody thought that the Fed was going to pivot, and they're going to continue to pivot. And last year when they thought the Fed is eventually going to start raising rates, and they were going to continue to raise rates, and they never raised rates, and then they were going to. So I mean, is this the month that the jobs roll over?
I don't know, but I don't want to. I don't want to gamble. If you take a position on this, you're basically gambling, right? On the number. Nobody knows the number. You can have an educated guess, but I wouldn't short it at this point. I wouldn't short.
But the White House said that that the employment picture might start to weaken.
Of course, eventually it's going to weaken because we're seeing it obviously in Europe a lot more, but the cost of energy going higher means that businesses are closing. It's unemployment is going to rise. I think that's inevitable. The question is, when does it happen enough to make a difference? That's the question. I don't think we're there yet.
Yeah. Well, it's I don't think we're there yet either. But what if so we're expecting 300,000 jobs tomorrow to be created. Unemployment rates expected to stay the same. If we come anywhere around that number, like even 200,000 jobs, if we create 200,000 jobs tomorrow, the dollar might see a little pullback really quick and then like a knee jerk, and then you'll see it rip higher again. I think, we have to see the number get close to like below 100,000 jobs created, maybe even, near like, a job loss for the dollar to be affected right now regarding this. And because it says you got to smooth it, especially with the jobs report last week beating by 200,000 jobs. Remember, we were supposed to create 300,000 jobs last month, and we created like 500,000. So, you gotta do a little smoothing there. But what do you think, Kman, with the jobs picture?
Yeah, exactly.
And with the dollar, I'm sorry, with the dollar too.
Okay, but as I've been saying, I think the next 24 hours are going to be very important. There should be some slowdown, because we had 2 months of serious beats of expectations in the job creation, right? For different reasons, and accounting and stuff. But it shouldn't be anywhere. It shouldn't be anything else than normal. That we should see a little bit of a slowdown. The line is 200K for growth or job destruction, I think, if that's still valid, that number over the pandemic. But yeah, I mean, anywhere close to that 300K tomorrow, and I think dollar shoots again.
Yeah, I don't know. I don't know about fading the dollar ahead of the data, and I know a lot of people are trying. So, Dale, you have any views regarding the jobs report for tomorrow and what we should be doing here with the dollar?
No. I mean,
you're still pissed off about yields. I get it.
I'm pissed off about the emergency in California, but
I know, me too. I'm still pissed off that I got to drive there, but
I think the yen is the thing to key on for a lot of different reasons. For yields, we need a yen top for yields to stop going up, and for markets to stop going down. So, I mean, it's all about the yen right now in my view.
Yeah, and if you guys want my dollar yen views, we had what I thought was going to be a Gartley pattern. I actually shorted the dollar yen around I think like 137. I want to say 137 or 136, like 70 or something like that. And then I got out as it broke out. So it was positive at one point, and then it broke above 138, and I stopped myself out. Took like a 70 or 80 pip loss in the dollar yen, trying to fade this move right here personally. But once we broke that, I'm now, a Gartley really turns into a butterfly. So, whether we see 142 or I think more realistically, we see about 145. Some other guys in our chat room, like Benedict, he's targeting like 144, I think. And so I'm looking for, and I think he calls that a crab, but I thought it was a butterfly. But anyway, I'm not a harmonics
expert. I had crabs in college. Like,
what's that? All right, Dale's making cracking joke. It's been a long morning already at 5:30 in the morning when Dale's cracking jokes. Hey, we're a few minutes from the unemployment claims. I don't know if Steve disappeared, but Steve was.
I'm here.
Dale's here. We got a couple.
Stel's here.
Already popped in here. Any other last minute thoughts before our data comes out?
Yeah, still close watch on the Norwegian krona, right? It's on very, very defensive right now. So I bought some. Selling any knocky rallies, in my opinion.
I bought some. If you guys are, again, if you guys
I
are in the
joined you.
Forex
Did you not
Analytics
see
chat
it?
room.
I joined you. Did you not see?
I did not see. No, so you can see, guys, like you can see I started my long US dollar Norwegian krona. I tell you what price. Oh, Kman, you joined me. Yeah, I see that now. I did not see that earlier, so it's cool. Now we'll show you why just really quick. Okay, we give you all sorts of free stuff today. I'm feeling very free-ish today. This is an inverted head and shoulder pattern. It's already a pattern in play via ForexAnalytix. It went out yesterday on an inverted head and shoulder pattern, so you guys would have been notified of that yesterday. Anyway, I'm actually starting to buy it now. Data's coming out. Jobless claims. What do we get?
Oh, 232. So better than expected.
A little better than expected, and the dollar is not doing. I mean, it's firming up a little bit as you would expect, but yeah. And that dollar yen. I mean, what a nice pivot off this this wedge breakout. And again, if you are with ForexAnalytix and you just read the dollar yen basic technical analysis, you knew that we would pivot off of that 139 level. And yeah, we're pivoting quite nicely. So I would be, if the dollar yen closes above 140, I would not want to be short that. I think this is one of those, and what scares me about the yen right now is it's completely
disconnected.
It's disconnected from risk, and it's following yields, but it also is a catalyst to drive the dollar higher too. So if the dollar yen closes like above 140, it could cascade into, you know, that price action could cascade into other things, you know. And you got the euro that's been very, you know, stable around the parity level. But what if the euro actually starts tripping stops 100 pips lower? It's not like it's miles away. It's only, you know, it's 1 cent away. I mean, if the euro starts trading below 99 cents, I mean, we could trade to 97 cents really quick.
Yeah.
Just because it's doing nothing and it's been consolidating. So, you know, when you get this like longer term consolidation around these levels, you know, once you break, you break. So that's the scary thing, is it's kind of like the domino effect that we're seeing in the markets. You get the dollar yen that breaks out, then the euro starts to cascade lower. Right. Then anybody that owns the sterling is like, holy shit, they want the euro, they want the yen, I'm going to sell my sterling. And then next thing you know, everybody that owns the Aussie is like, oh, well, the Aussie's been holding up around 67 cents, but with the euro falling down, with the cable rolling over, with the yen getting decimated, well, I might as well sell my Aussie too. And then you can see the domino effect really starts to roll through the market. So that's the thing.
That's what Paul wants.
Hey, look, it tames our inflation.
Yeah, that's what he
wants.
wants.
You know, screw the rest of the world. You know, the US, we're dealing with inflation just fine over here. Except I did go to the grocery store yesterday and I was like, oh my God, these prices are so high. Anyway, I'm going to let you guys go. Dale, I can't wait for all of you guys to see the interview that I did with Dale. It's on the Traders Summit site. So you guys be on the lookout for that, because
no dad jokes.
No dad jokes at the two.
I restrained myself.
All right, guys. Well, Kman, you're awesome. You're awesome sauce. And Stelios, you're okay too. And Steve, we love Steve. So
I don't know if I'm going to watch your interview with Dale, because I was really hoping for Dale to do as like a Frankie impression, you know, a bit of a crooner songs and things.
I did it my way. Yeah, anyway,
so have a good interview.
There
Thank
you go.
Dale.
I'll make you a CD. All right, buddy.
Yes.
All right. So thank you, team. What a week. It feels like Friday already to me.
It does.
How about you, Josh? Welcome back to F.A.C.E. Waiting for your mic.
Hey guys, how you doing? Great to be back.
Good, Josh. How are you? How's your dad doing?
Doing well, thanks so much.
All right. So I know that I think you call your service layup trades.
Yes, sir.
So I could use a few because I've been getting stuffed every time I go up.
Can't we both?
Yeah. So maybe you could share your screen, and and share with us what's on your radar, buddy.
Sure.
Okay.
So let me get it shared up here for you.
Okay, so you use the is that market profile on the right hand side and left?
Yeah, so I use market profile and Fibonacci retracements are my two go-tos. Let me get some of this other garbage out of here for you real quick. There you go. So yeah, this is we're looking at the S&P futures. So in Fibonacci retracements and Fibonacci's and in profile, you're looking for 61.8 is the golden retracement, and the counter opposite is the 38.2. And so what you see here is a combination of those levels laid across the screen on different time frames. The tertiary starts at the all-time high here back in December and runs down to the lows in June. And you can see that off that bounce, we come right up into the 61.8 here at 43.61.5. It's
Since
also
you
the
keep bringing up
downtrend
61.8, Josh, you ever hear my 61.8 poem?
No, but now I'm so intrigued.
All right, here it goes, man. 61.8. Feel it resonate. Right when you think you've learned the tricks, it stretches out to 78.6.
I like that.
All right, go ahead,
and
buddy.
how true it is, yes.
All right. So do you think we're going to dig in our heels here in front of the NFP tomorrow and hold this channel in S&Ps here?
You know, just to
NASDAQ's broken. Okay.
I do. Yeah. And see, and here's the problem. It's what I think we're just gonna see coming is we're coming into that 61.80 that we've been talking about on the NASDAQ here, and it's untested. Yeah. It's our first test into it off the low, about 12.090. And the market is in general a short-term oversold. I am expecting that if we do drive into this 12.089 or just below it, as your home so eloquently states, that this is going to be a good pivot bottom for at least the shorter term. What's happened is since our last options expiry, we've really ran into like a negative gamma feedback loop, if you will. There's puts being bought and puts being rolled out with very little calls being bought. And
all
so
the calls were bought above at the highs and above 4,300 in S&P.
Right, exactly. So
now they're buying a lot of puts.
Yeah, so puts are rolling from above 4,000 down into 3,900, and so here, let me just back over to that one for you. And so what we're seeing is that it's spot gamma is what I use for all my options data. They're great service. Not trying to plug too many people, but except me and you, of course. But so what's happened here is that there's a substance of puts at 3,900 level, and what's happened is the curve of gamma has flattened down here. And what that represents is that dealers are no longer trying to buy volatility to protect themselves. They've got an ample amount of such. And for that reason alone, in the options profile idea is that the 3,900 level should probably cap the bottom unless they continue to roll those lower. They haven't rolled them lower since the 4,200 test. They've been sitting right at 3,900. And so pairing that out with the 61.8 here and the 61.8 on the NASDAQ, personally, I would look for the short-term bias to become that we are oversold. That we'll probably come back up into about, we'll hit 4,000 and 40.64. The issue again is the negative feedback loop for options generally exists from options expiry to options expiry. It's really hard to break the feedback loop. You need a major event to do so. And so options expiry does it. FOMC meetings usually can get it done.
How about a weak NFP number tomorrow, Josh? Would that do it?
And I'm thinking if we see today we open and we drive through our Globex range here, we go and do it.
And we're getting a question from our attendees, Josh. Which VP on TradingView in green? What is that?
Yeah, so this is the visible session profile.
Okay, Jeff, you got that? That's it. And he gave you the name. It's not custom?
No, it's called visible range.
Okay. All right. Thank you. Thank you, Josh.
So what I'm thinking here, Dale, is that we've built out this shorter term volume here in Globex low at about 39.30. If we open market and we drive through that and we trap short-term Globex, we can get into that 61.8, and that's going to be my entry long for the market into tomorrow. Like you said, we do have what is that
I would call a major event, but yeah, we have NFP.
39. Yeah, NFP. And I mean, I wouldn't call it a major event, but it's enough to bring the market out of an oversold status. And so
39 even, Josh, I'm sorry, I didn't catch it. 39 even is
30. 60? Well, so the 61.8 is 39.02. The put wall is 3900 flat. So
okay, got it.
I have an order staged at 39.03. Actually, right now, I staged it before market closed yesterday, just in case we came in overnight.
Okay, got it.
And so that's what I'm looking for this morning is we lose the shorter term volume from Globex session 1900 into 7. We drive lower, it traps this range in the short term. They have to close to cover. We force down into 3900. We see market makers step in to supplement their flow, and then we get that drive higher. First target would be this volume node up here, 3980 to 4000, and then it opens back up into 4064 and 4085. I am of a mindset that it's going to be very difficult to move above 4085 here. But volume profile does say 4140 is an option. I try not to play through my retracement levels. I'd rather get a little bit and not have to worry about losing it all. So
okay, so I see under your charts, I know those are volume bars. What do you have underneath the volume bars? What is
Sure. Yeah, so what this represents, this is DMI. So the red line is the selling pressure and the green line is the buying pressure. A lot of people just think it's buying and selling, but you can actually break the two ideas apart. There's a lack of buying and then there's excess buying. There's a lack of selling and then there's excess selling. And so what this indicator does and what it represents is to show you that break apart. When the stock market comes down, is the stock market coming down because it's being forced down through sells or because there's a lack of buying? And so this is basically what this. The yellow is the accumulation and distribution of the market. So any green candle is labeled as any green candle is labeled as a buy. Oh, my downstairs computer's like, hey, it's time to turn on. Boy, stop that. All right, here we go. So for the best, last time. Any green candle labeled as a buy will increase the line, and it's easier to see here on like a 15-minute in session. Okay, it's gonna be
you do drill down to 15 minutes for
if I'm intraday trading, I'll switch over to a 15-minute. If I'm looking for trades, if I'm trying to find setups, stock patterns, charts, etc., oversold, overbought status, I usually trade in the dailies and weeklies. I try to start on the longest term time frame and then drill down from there.
You consider yourself a swing trader, day trader, or position trader?
I started as a day trader, and then I moved into swing trading. Some days I question why I ever made the move. Other days it's great. It's certainly a change, trying to switch gears from in and outs to holding, and the drawdowns are certainly quite a bit different as well.
Yeah, and so are the gains.
Yes, most definitely.
The market to work for you.
Yes.
Okay. So I think you have the S&P gave us very, very nice coverage on, some areas to pay attention to in the next 24 hours. Do you mainly just trade stock indexes?
No, I trade across the entire spectrum. I usually do my research is on Saturdays and Sundays, try to find, I run scans for usually compression scans are usually the thing that I would look for the most, stocks that have come into a tight range and, there's basically a battle between buyer and seller in a tight range. And I look for those releases out of those, no different than the right side of an inverse head and shoulders or a head and shoulders pattern or, something to that nature, a rectangle bottom, ascending triangle, patterns that have good track records and good statistical historical records are usually what I try to key on.
Would that include the ags specifically the grains? grains I always felt were real good technical markets.
Yeah, grains are really great at technical market. We traded corn a lot earlier in the year when that was the big thing, and wheat.
What do you think of wheat now? It's been grinding out, trying to grind out the bottom. I don't know if you're, I know I'm just pulling this out of the air for you. But,
oh yeah, you're good. Don't worry.
Okay, so you see that formation. I don't know what your work would tell you, but
yeah. So again, like we see. Yeah, and so we see. I mean, we see where that bottom is coming in, right? The 61.8 here at 7.596.
Isn't that a coinkydink 61.8?
Isn't that a coinkydink how that works? They trap the bottom out like your Plum references, and then they recover it, and now we're into a consolidation pattern. I think the only thing that worries me off of this chart, other than this level up here, the 894.6, is we're starting to make likes on the right and the left side. We see you're trapped here on the left, and now you're starting to trap here on the right with a multi-topped head on the top as well as the downtrend. And so what would worry me here is if this is a consolidation to break lower through that range. Would honestly be my worry. We've got the high here. We haven't been able to see wheat violate the previous high here at 474.6 or 874.6 over here on this high as well. We have the test here and then we break. There's no retest. There's no recovery here of price to come back and back test it, and we see that failure back through range here. And so for this wheat market to open up, need more coffee. I'd really like to see this 476, 494 break to bring us higher. Elsewise, I feel like it's more of a consolidative pattern. But you're right. We see the accumulator down here in the yellow, like we discussed. It's showing that markup that you're talking about as well. There's an accumulation down here in this base, and for that reason alone, I certainly wouldn't short wheat. But it wouldn't be my go-to until we break out. It kind of looks like what we would call a rectangle bottom here.
Yeah.
Like this. And so the break is out of this pattern, out of a rectangle bottom, it's about 80% of a move of the size of the range. So 740 up into 840. So it's 100 points called 80%. And so you're looking for 80. What's that?
A buck on a contract, futures contract, is $5,000.
Oh yeah, okay, yeah, $5,000.
Yeah,
and so the range here's, and so the range of the rectangle is 100 basis, and so the break says that the stats say that a break outside of this box that we've drawn should move price 80% of the range of that consolidation, which so we're talking 80 bips, 80 basis points, however you want to call it, of a break, either way, upside or down, out of this box. So is wheat tradable here? No. But is wheat tradable eventually? Most definitely, yes. And if you're looking at 80 points outside of either direction, then you're looking at 666 up into just about 930. And isn't it a coincidence that the previous top of the wheat market was here at 936? We have this, we have 5 daily tops out here, and then we cause failure. And
Good on the fly analysis. How about anything telling you about US dollar yen made a new high for the move this morning, and the dollar is trying to make a new high? Anything in the dollar or yen that tells you that we might be getting close to some type of terminal move here?
So let me start with you with DXY. I've got it charted already. I'm sure I do have the yen charted, but I don't trade it as much. But just in the Dixie, just looking at Dixie here, there's nothing yet that says, caution, this is coming down. If anything, this is representative of something that continues to carry a bid. It's a very, to me, it's a technical move. We set that high again. We test the 61.8 of the previous range at 104.73. It's supportive of that, and then we break higher. The pink level is my longest term level. It's lifetime. It's based on the entirety of the chart from the very low to the very high. And so 106.61 was broken back over. And not only was it broken over, it really wasn't even a problem, right? We extended through it. And it takes a lot to drive price that high through in the dollar and through a major support level or resistance level. And now we see high consolidation, high tight flagging consolidation here. I honestly wouldn't be surprised to see the DXY make new highs. Have the next reference point is 112.17 on the DXY.
Okay.
And again, if you're trying to trade it long, this is just on a daily closing basis. You don't have any daily candle closes below 108.4 in the entirety of this consolidative phase. So really the stop on the long here is 108.4. And if you can get a better cost on it, that's fine. But overall target for me would be already at 112.17 for DXY.
Okay.
Let me see if I got the JAPY. Oh, hey, I don't have many lines on USJPY. You see the same thing here, and the accumulation distribution is showing you the same spiking action, right? There's no negative divergence in this. It's recording all the buys and moving the line up, and all the sells and moving that line down. And so while we do have resets here within the consolidative areas that we're having, the overall move continues to drive that price higher. We have the USD JPY already breaching highs. So if it can continue to hold that 139.38, it opens all the way up almost into 145. That's 144.948 up there at the extension level. This one isn't as clean as the DXY. There's not a lot of consolidative action up here. Like on the DXY, we saw almost 2 weeks of full daily consolidative action. Here we just have break and drive. So we're not creating as much support below price. So I wouldn't be as confident in taking a position in the dollar yen as I would in just taking a directional play out into the dollar. I don't know, to be fair, I'm not as versed in Forex as I am in stock and equity. So I can't tell you the ramifications of that analogy or that suggestion.
Do you show any accumulation beginning in a sector that's been completely massacred, the miners?
It's GDJ, right?
Yeah.
GDX. GDX.
New lows.
Yeah, new lows. Nothing is coming into it. I haven't even charted it that way. Yeah, nothing has come into it. We are coming into this massive volume profile, and this is on a monthly chart, right? So we would expect volume as when approached from above functions as support. Volume when approached from underneath functions as supply. Right. And so we would expect for this area to 23.3 or so to be supportive because of the consolidative action previous in range here. Okay. We can see again that tight consolidation that ends up breaking up and out. And so for me though, because move this to the background real quick. That's the only problem with having fun colors. They all don't jive well together. So for me here, because we've broken back below the 61.8, 25.15, I cannot create a long position out of this. I could play an iron condor to contain price within the range here from 21 to 25. But until price can reverse and recover 25.15, I can't play this long. I hate to keep bringing up the analogy of your poem, but it holds true again, right? Okay. If we place the 78.6 on there, it's almost at the base of the box, and so that to me this is risk, even though it's in oversold condition. Until we can break 25.15, I would think that we can retest it, and then it's consolidative in nature.
Okay, we're starting a new month. Strongest idea, highest conviction trade for September.
Completely sideways for the NASDAQ for the foreseeable month. I think that everyone
strongly
is getting
neutral.
Strongly neutral. I think I think everybody's seeing the increase in volatility. Everybody is excited about the volatility. Everybody sees the opening ranges and the drives, and everybody's preparing for such. But coming into, everybody's either wants a crash or thinks this is the exact bottom and we're going to go to brand new highs.
Yeah, and that's a big question. What do you think, Josh? I mean, we had that nice rally from June. We pulled back 61.8. Is this just consolidation of the rally from the late June low, or the resumption of a bear market?
So let me get this off here for you.
And we'll wrap it with the answer to that.
All right. So I don't think this is like us setting a low as a drive back into the new highs. I see this as a short-term oversold bounce. But I don't see enough behind the underlying charts, the top weight charts, Apple, Microsoft, Tesla, etc., that suggest that we should move much lower. And so I think that we're going to come into a period of stall where we wait for direction from the Fed, where we wait for the actual policy to be tightened in a little bit, where we know the resolve. I think that you see range bound NASDAQ from about, let's just call it 12,000 up into 12,700, 12,800. And I would assume that probably perpetuates through the course of September, if not through October as well. If you come in and you strike a trend across the tops here, you see that the resolve breaks down the must hold support 1290. We get that downtrend cross in December here at the end of December, and we get forcing action through this range starting in about October, November. Some would say that it's happens chance that we have midterms coming up in that exact window and we have China news in that exact window. And whatever it is, I try to distance myself from the news and just use the charts. But it is true that catalysts are what create action, and the charts just help you find that. And so I'm thinking we stall out in range here, and depending on the results of said the Fed direction of the midterm, then we'll get our breakout side of this box, the 12,000 up into 12,700, 12,800. But until then, I think we're really going to start to get sticky in here. We'll see implied volatility draw back in, and everybody's going to be trying to swing for the fences one side or the other, and usually that's when we all get stuck up and lose a bunch of capital, is when the market just quits moving altogether.
So, Josh, best way for people to follow you, get a hold of you, if you want to show your website, that's fine as well. How would they get a hold of you and contact you?
Yeah. So my personal handle on Twitter is JMValaTrades. I'm there all the time. JMVala_trades.
Yeah.
I guess I could just do this. Yeah.
Okay.
There I am.
So that's where you could find Josh.
That's where you can find me. If you're interested, I've got a link to our service here, Layup Trades, $1,000 a year. It's me and my buddy Ash from Texas. We run it. He runs a futures room. He's coded his own algos to watch the futures market. I watch stocks and predominantly trade option flow and options contracts. Always here to talk or take messages. Like I said, you can check us out on the website or not. I tried my best not to force that upon people. I'm here to help. I started not knowing a lick of things back in 2012, 2008, 2009, and just kind of worked myself through it, through the loss of quite a bit of capital.
You're getting the hang of it yet?
Yeah. So finally, I think I'm starting to find the bottom. All
right, you're getting the hang of it.
I'm really an advocate of just being there for people who have questions.
Yeah.
So
where in Illinois are you, Josh?
I'm in Springfield, Illinois.
Oh, the capital. Okay. Say hi to Abe for me. Statue. All right. I grew up in Chicago, so
anyway, most people would think that's the capital.
Yeah. Of what? Crime?
Venture outside of Illinois, and that's exactly what they think.
Yeah, Al Capone was my great uncle. I'm kidding. So anyway,
that's awesome.
Josh, I'm so glad things are good with the family, and appreciate you coming here. And showing us some nice looks in the S&Ps for the next 48 hours. It's going to be pretty important. That 61.8 dig, is a stopping point for this break. And I want to thank you, my trading warrior brother, for showing up on the beginning of a month before a long holiday weekend. And I root for you.
Thanks, Dale. I appreciate it. Rooting for you too. And thanks so much for having me on. Anytime you have a blank spot, let me know. And I'd love to keep chatting with you.
All right. And you could use the poem. I have no copyright on it.
I'm definitely going to use that poem.
All right, man. All right, everyone.
Thanks, Dale. Have a great day.
Josh Vala. People are thanking you, Alexander, Ingmar, and appreciate it. So team, you could, so everyone, you could join the team in 20 minutes on the Morning Edge. Good hunting the rest of the day. Remember, don't just count your pips, count your blessings. Adios, everyone. Thanks once again, Josh.